can I refinance a commercial mortgage? And the answer is yes. Interestingly enough, many people believe that commercial mortgages somehow are a little bit different than maybe the mortgage on their home. And while that's true, refinancing it, many people are surprised to learn that they can refinance a commercial mortgage. Now, the penalties are larger, of course, so if you have a home and you've ever refinanced the mortgage on your home, you would know that there are sometimes penalties that are incurred, certainly an interest rate differential, an IRD, or maybe 3 months. But in commercial mortgages, the same principle applies. But refinancing a commercial property is a great way to free up some cash. The standard amount of money that you can refinance on a commercial mortgage is about 65% of the value. But if your business occupies the property, so this is a building that your business operates out of, or operates out of more than 50% of the available floor space, then you may be able to qualify for more than 65% of the value on a refinance. The amortization period is on average about 15 years, but again, depending on the bank that you use or the credit union that you chat with or the lender that you might be working with, they might be prepared to give you a longer amortization period than that to allow you more time to pay back the mortgage. As it relates to amortization periods, it's important to know that many times the bank will want the amortization period to be less than the expected life of the building. And so if you have a commercial property, you might have to get a mechanical report or a structural report, or have some way, the bank will ask you for some way to prove what the expectancy of that building will be, or what's the life left in that building. And if it's 15 years, then you might find that they'll give you an amortization period that's slightly less than that. If it's 30 years, then they're probably more than happy to give you an amortization period of 20 years or 25 years. So just a little sidebar, make sure that you do know what the expectancy of the property is. How long will that property be in good health for, if you will, and then you can line up your amortization accordingly. Because you are going to be refinancing the mortgage, one of the big considerations to make, of course, is that you're now going to be paying interest again over a new amortization period. So kind of mortgages 101, an amortized mortgage is a mortgage where every payment that you make, a little bit goes to interest, a little bit goes to principal, and over time, the amortization period, you would have fully repaid that mortgage. And so the first half of an amortized mortgage tends to be mostly interest, and by about the halfway mark it starts to be, each payment starts to become mostly principal. And so if you're looking to refinance and reset the amortization period, so maybe you ended up buying a building a few years ago, you were making payments, it was done on a 20-year amortization, and now you want to reset that amortization and put the mortgage out over another 20 years, you're basically going to be paying a bunch of interest for that. So if you need to refinance your commercial mortgage, make sure that you know what the cost of doing that is, and that it is truly a cost that you're prepared to pay. Now today, in our interest rate environment, it's many business owners or many commercial property owners will say, well, because interest rates are so low, I don't have a problem re-amortizing the mortgage. I have tenants that are paying the rent, or as a business, I know that our business is going to be able to continue to pay this rent for many, many, many years to come. So having the cash is more important than paying the interest over time. So those are just business decisions to make, but make sure that you're aware of them so that you go into the transaction knowing what you're signing up for. We have some examples of people that have done this. We know that there are seasonal type businesses that end up refinancing their commercial property to free up cash for their off season so that they can pay for their operating costs during a downturn. We know of some businesses that have come through emilynow.ca where they own maybe a little commercial bay, and there was maybe some receivables that they didn't get paid on. So maybe they had done a big job for a few of their customers, but the customer ended up not paying them, or for some reason experienced some financial trouble, but they've been carrying the costs that were associated with that project. So they had to pay for materials, or they had to pay for the labor, expecting that when the job was done they'd get paid, and because they didn't, they took that cash to pay for those things out of their business. And so refinancing their commercial property allowed them to take that equity they had, put it back into their business, and fix the cash flow that they had. Some people refinance to pay for things like GST, believe it or not, taxes, and so again, a commercial piece of real estate is no different than a residential piece of real estate, and it's a great way to access the equity if you need it, and certainly there's lots of options for it. So we'd encourage you to jump on emilynow.ca if you are looking to refinance your commercial mortgage. Once you jump in there, you can drop in the mortgage amount that you're looking for. It'll ask you a few questions, and then it'll show you what's going to be required. And ultimately, when you sign up for an account, you will be able to connect, send your information directly to the banks and lenders that can help you, or you can send it to us and we can help you with that as well.